insurance is ripe for disruption. We are such a poor industry in many ways. We do add value, but if you think about it, as customers, as we all are, we're paying for something probably with no return. If you're an optimist, you assume nothing's going to happen. You're not quite sure how to value it, how it brings value. And if you need it, the first question is, am I covered? Not, I'll make a claim, but am I covered? So there's so many ways that people can attack us and provide better service and better reassurance for customers. So we need to embrace that. We absolutely have to embrace that. I think it's going to happen in 4 different ways. First one is all these intelligent devices and more information coming up. It's going to mean that insurance is going to be more personal in the future. So instead of providing car insurance and house insurance and life insurance and pet insurance, how about if I insure you? So this is the way we work in Hiscox. We look for good people. Good people live life in the right way, manage their risks, look after their stuff. So people with good morals and good approaches to life are good risks. So how about I insure you and you just pay me 1 monthly fee, and anything you do is fine. Anything you buy, anything you own, any activity you do, you're covered. Because I've insured you. I've insured the way you are, I've insured your personality, I've insured the way you live and the way you work. I'm happy with that. I'll give you 1 fee, and I can start to do that with the amount of information I can collect about you and your lifestyle, social media and all the things, all the information available. Even your phone is tracking where you are and what you do. That gives us the ability to start providing personal insurance. Segment of 1, we call it. Instead of a segment of 20 to 30-year-olds, narrow it right down to the individual. That's where we're going to go. That's the first example. Second one is intelligent devices. So we will put more and more devices into our home and into our car that track what we do. That way you can start to control the liability, control the risk, and you understand what the risk is. That makes premiums more accurate. So we can start to have more of a relationship with our customers. So how about if you have tracking in your car? And one of our guys has just been through this. So someone who works here is East European, and he came over to live here. He's got 2 kids now, and he bought a car and he needed to get it insured. He couldn't get insurance because he's from Eastern Europe and no one really wanted to know. And he had to go for a company that put a black box into his car. Now you think, okay, then it tracks how fast he goes, how much he brakes, and when he drives at night or day, starts to track that, and they can manage the risk. Now it's interesting because it creates a new relationship that's never happened before. So they gave him effectively a game with some dials on it, where if he changed his driving and what he did, he could bring his premiums down. And he started off with a £4,000 premium, and he's got it down to about 600, just by working on okay, well, if I go a bit slower here, or if I brakes, if I'm a bit more careful in my driving, I can bring the premiums down. And it became a game for him. The only problem is he's now managed his driving, and he's a much better risk. And he started analysing it a little bit more, and he realised the person putting the premiums up was his wife and the way she was driving. So that's a different dynamic. But that's the other thing that's coming into insurance, is intelligent devices. The third one is moving to a more service-based. So stop selling insurance. None of us want to buy insurance. One of the weird dynamics about insurance is the more you buy, the less good you feel about yourself. Think about buying all the insurance in the world. What you're saying is something bad's going to happen. And we're all optimists. So you don't really feel good about buying insurance. There's something wrong with that relationship. And also when you buy insurance and someone says it's going to cost you £600 to insure your car, that's a judgment. You're judging someone, you're judging their risk. How dare we as insurance companies judge how you're going to drive and what we think your risk is? So there's lots of problems with selling insurance. So how about we move to selling a service? So how about a house service, where anything that goes wrong with your house, anything, you just call us. We'll sort it out. Now there may be insurance cover behind it, but from a customer experience point of view, you're helping someone, helping them with their lives. Whether it's burgled, or whether a tree falls on it, or whether your pet falls over, or whatever it is, call one number. We become a positive influence on someone's life, rather than you only call us when there's a problem, when there's, and then you're not sure if you're properly covered. So there's a way of of doing that. One of the examples I like in terms of getting between incumbents, as we are insurers, and a customer, is ClassPass. I don't know if you've heard of this. If you buy ClassPass, you can go to any gym class in any gym in London. What a great idea. You don't have to join any gym you've got. It has a timetable, you have to be there for a certain time. How about just, well, I happen to be here in London, I want to go to a particular class, I just pick the nearest gym. ClassPass doesn't have any gyms. It's that classic intervention between the customer and the gyms. No gyms, it's just an online service and a card. They've done the deals, you can go to any class in any gym in London. Great. It's a great model. So we want to look at those kind of models. And then the fourth one is the way that the world is changing. So, and the way the shared economy is starting to evolve. So an example of that, if from insurance point of view, might be you and your neighbours all insure together in a neighbourhood household insurance system. You all contribute and you pay out any problems, any claims in your neighbourhood. Obviously you're all in it together, so there's a bit of social pressure not to make too many claims. And then any profit that's left at the end of the year, you distribute it back out. So you all have skin in the game and you benefit if you're good insureds. It's an example of a shared economy. Another example is the way technology is changing is insuring driverless cars. So we'll be moving with the times. We'll be looking at new models which you can adopt with the shared economy, and we'll be making sure that we move with what insurance people that they need. An example is Airbnb. Most insurers won't cover that. Because of the philosophy we have is if we haven't explicitly excluded it, it's included. We haven't explicitly excluded Airbnb use. Our standard home cover covers you renting out your room through Airbnb, and you're protected. Your contents on your house is protected, even if you rent out your room to strangers through Airbnb, is covered. So you have to keep moving with the times and understanding what people do and what cover they want. We'll continue to innovate on products on that fourth way.